Speaker. We have Rupesh Patel, Senior Fund Manager, Equity Investments at Nippon India Mutual Fund. Rupesh, good to have you in. I mean, before we get down to the usual brass tacks questions, let's just weigh in on this. This whole mid-cap fall that's happening, I think if you could hear Mr. DP Singh of SBI Mutual Fund talking about how different asset managers are looking at putting curbs in place, checks and balances in place, so that there is no overheating. For your mid-cap and small-cap fund, what is the stance right now? I mean, how are you managing the inflows, given that perhaps valuations have really run up in this whole universe?
So thank you so much, Surabhi, for having me on your show. Now, as far as risk management is concerned, I think it's an integral part of portfolio management. So we at Nippon have well-defined processes wherein, I mean, for each and every fund, we look at various risk parameters, which includes what kind of liquidity we have in our portfolios. And that's something which is monitored on a very regular basis and is presented at and discussed at our investment committee levels as well. As far as flows are concerned, you are well aware that we have also on our small cap fund some time back only have stopped taking lump sum investments and are allowing only investments through SIP route. So, I mean, wherever we felt that we need to take steps to protect interest of our investors, we have taken those steps. And as far as risk management is concerned, as I said, it's something which is an ongoing thing which goes hand in hand with the investing actually.
Rupesh, how are you feeling about the market right now? I mean, everyone's talking about this overheated nature of small and mid caps, and in light of the constant money that is coming to you every month, how are you looking at asset allocation? Are you looking for newer ideas or putting more of the same in your existing ideas? If I had to ask you, the proportion of money that comes in, that goes into new companies or new asset ideas versus the ones that go into existing ones?
I think it's combination of both. I mean, when we are managing money, we are constantly evaluating the opportunities which are there in the market versus what we have in our portfolio. And we look at these opportunities from risk reward perspective. We look at these opportunities from future growth perspective. We look at these opportunities from liquidity perspective. And wherever, weight adjustments are required or inclusion or exclusion of certain securities are required. When that goes on, I think it's a continuous process and would be very difficult to very categorically divide it into what percentage goes into new ideas and what percentage goes within existing stocks. So I think it's a function of risk reward and future growth opportunities which these companies present.
Yeah, theoretically, I get your answer, but what is it that you've recently done? If you could tell us, so where is it that you've reduced weights? Where is it that you're looking to increase weights?
Yeah. So the way we approach, actually, we evaluate, yes, in any bull market, there would be pockets of euphoria. In current market also, particularly on relatively smaller cap names, there is euphoria. I mean, some of the sectors which have done pretty well in maybe last 2-3 months, you can very well figure out that some of the stocks have gone up to where, I mean, they are bereft of fundamentals. There is a lot which is going up on narratives. So I think as a prudent money manager, it's our job to avoid those narratives, to limit our exposures wherever valuations are extreme, to make sure that the stocks which come in the portfolio are backed by fundamentals. There can be near-term challenges on some of the names because of growth being weak or valuations appearing higher in near term, but maybe from medium to longer term, they still present an interesting opportunity. And that's what we really try to do in our portfolio construction.
Okay. So Rupesh, let me put it the other way around. I mean, on days like today, these are great opportunity days to go in and buy more mid caps, or are you looking to sort of lighten some positions now? And what's the cash level that overall, you're running across most of the key funds?
So as a fund house, we don't believe in taking large cash calls, trying to predict which way markets will go. So the cash which is there in the funds is more to manage liquidity and take advantage of, some good opportunity which comes your way on a day like this, or maybe when some large block deals happen. But otherwise, we believe that the mandate given by investors is to invest that money prudently in the markets. So we don't really, try to take large cash calls and trying to predict which way markets will go. So accordingly, we will have maybe 3 to 5% cash across our funds. In some cases, maybe even less than that. But definitely no large cash calls in the market, in the portfolios.
Okay. Finally, just leave us with then the top overweight sectors for you at this point in time. I mean, markets may do their own thing, but just in terms of the house call, which are the biggest overweights and why?
Yeah, we believe that in the current context, some of the relatively larger size companies, say larger banks, they offer better risk reward because, if we see, then, as far as asset quality is concerned, that continues to remain benign. Last quarter, we have seen some pressure on margins, but I think this is something which is very well flagged off, that deposit mobilization is not keeping pace with the credit growth. But since it's well flagged off, market is well aware of no likely surprises on credit quality, at least in near term, and valuations are reasonable. So that is one space where we are overweight and we have a meaningful exposure across most of our portfolios.
All right, Rupesh, thank you so much for joining in and giving us your views on the markets, the themes that you like, and the way one should approach markets in the current situation. What we'll do is we'll actually take a short break, come back, talk more about the markets with the news that the Nifty is actually down about 200 points right now, meandering between 22,000 and just below that. The Nifty bank continues to languish with a 500-point cut, and the mid-caps, they haven't gotten any better. 1,900 stocks still declining, with 345 stocks which are on the advancing side. Come back, we'll tell you what the dealing rooms are making of in the market in the move today as well, and about the stocks as well. That's the street chatter. We'll also get you buy today and sell tomorrow calls from our technical experts.